and investing in Americans. It's working. A key pillar of Bidenomics is empowering and educating workers who are the backbone of this country. I want to mention a few actions my administration took this week to support workers by raising workers' pay and helping more workers get good-paying union jobs. First, we proposed a new rule to extend overtime pay from...
The United States payments on federal debt has surged to $660 billion. That number has almost doubled in 2 years. Now, friends, according to the Treasury report released this week, the U.S. government spent $659 billion this year. The government is actually spending a lot of debt. Because the federal government responds more to spending and collects tax revenue, the Treasury Department issues new debt to cover the rest of its payment obligations. The debt must be repaid with interest, and it costs that grow as the debt grows. And as the central bank has raised the rates to cool inflation, the borrowing cost goes up, way up. Most economists say these payments are economically wasteful because the government could spend money in more productive ways than paying back bondholders. But the U.S. spent more on interest than on child care and federal programs. This year's sum was almost twice as much than 2 years ago. The government is also spending $476 billion paying off the interest on its debt last year and $350 billion doing so last year as well. Although interest payments have been previously higher, as share of the nation's economy just continues to increase. Within 3 years, if interest rates remain elevated, payments on debt could actually become the second largest federal program behind only Social Security, which provides pensions for tens of millions of seniors. Within 3 years, if interest rates remain elevated, payments on debt could become the second largest in federal history. But in 2021, the nonpartisan Congressional Budget Office projected payments on the debt would cost roughly $5 trillion in the next decade. In May of this year, if projected payments on the debt would rise to $10 trillion over the next decade. The surge in interest payments reflects the growth in the annual federal deficit. But still, other policy experts say the risks are real and growing. A wide range of fiscal analysts have actually said that mortgage rates in corporate lending is tied to the interest rates on U.S. debt. If the yields rise, then it will likely mean mortgage rates would go too. But House Republicans are set to renew their search for a speaker. And now, some Republicans are announcing quick bids. But Representative Mike Johnson, an attorney and former talk show host serving in his fourth term, said that Jim Jordan's failed speakership bid is because of himself. McCarthy has not ruled out a return as Speaker should the Republican conference fail to elect his new permanent replacement. But let's see what happens. It could complicate the government's ability to avert a shutdown, as it would mean newly empowered House Republicans need to agree with 60 senators and Joe Biden to get this done. But so far, the GOP senators, the top Republicans on the Senate Appropriations Committee, said today that there is more optimistic than there was a week ago about the possibility that negotiators will reach a deal for a full-year funding package, and he warned that he is still guarded because there is no deal reached yet. The governor said, "We haven't reached a solution to some problems, but we're moving in the right direction, and we're probably going to need more time on this." So the approaching deadline for government funding had members of Congress and their staffers from both parties, as well as Biden's administration, to continue to talk through negotiations over the weekend to try and get something done. But over the weekend, Democrats and Republicans are sharing with one another their bottom lines on various fronts, and the White House remained publicly optimistic that an agreement could be reached on an omnibus. But Democrats counter by saying those measures were necessary to help the country recover from the crisis. Now, congressional aides acknowledged to CNN that the weekend talks were better than days prior, which is why Democrats have announced that they will not introduce their own Democratic-only omnibus plan this weekend. For now, a bipartisan deal remains on the table. It remains elusive still. Lawmakers haven't been able to reach an agreement yet, or reach a full-year funding package as of now. But Mitch McConnell said this afternoon that Democrats must drop demands for additional spending on domestic programs in order to get a broad government funding bill passed before the holidays, or risk passing a short-term bill into early next year, after Republicans take control of the House, and will be poised to determine even lower funding levels. But Americans, including hundreds of thousands of federal employees, could soon see an impact of a government shutdown, because according to CBS, most Americans will see and notice the disruption in one way or another. Many national parks would have likely shut down, while mortgage and other loan applications could be delayed, because the IRS could stop verifying income and Social Security numbers. Now, government agencies that are deemed essential would continue despite a shutdown, but still, the last shutdown was December 2018 and January 2019. It was a partial closure since Congress had already acted 12 appropriations bills. But right now, Congress really hasn't done anything. So this means that If nothing is done and no bill is agreed to, then pretty much no stimulus checks yet. I mean, not yet. But now there's a fourth big stimulus check and new deposit has been released. Americans can qualify to get at least one more check before the end of the year. So as the holiday season gets into gear, Americans will be struggling financially more than ever because of one thing: it's inflation. Increased prices continue to stretch many families' budgets, with a recent poll finding that a majority of Americans are concerned about how they'll get ahead this year. Luckily, many states are sending out direct checks to help the residents cope with this, and Californians authorized direct payments of up to $1,000 just to help residents cope with inflation this year. The state's franchise tax board said that more than $5 billion has already been distributed through the program. It's known as the middle class tax refund. However, recipients won't see the payments until December or January, and direct deposit payments for those who received Golden State stimulus checks have already been issued to banks. So Californians had already changed their banking information. You should wait and file a 2020 tax return, and you'll receive a debit card that will be mailed between December 17th and January next month.
Rescue plan. Connecticut is set to receive $2.6 billion in state relief and $1.6 billion in local relief phased in beginning this year until 2024. Now, what are the funds set to go towards? The governor says almost $1 billion is set to support schools, focusing on temporary learning programs to catch up students. There will also be extended unemployment insurance benefits and support for public health, economic recovery, and vulnerable communities. The governor joined by Senator Chris Murphy, who says this.
Because now a big day is coming for Americans, the Social Security Administration has a new update for Social Security and SI. New direct checks worth as much as $2,000 are set to arrive tomorrow. Officials have confirmed that some recipients will get and not always receive their usual monthly payment this month. Instead, they'll be giving away some stimulus cash, possibly. And now the third round of financial Social Security return benefits worth up to $4,200 is scheduled to go out to recipients in tomorrow. Now that amount that recipients will receive from these checks will vary based on several income factors, including when a person would choose to retire and start receiving the benefits, as well as when a person is supposed to get stimulus. But according to the Social Security Administration, a person must have retired when he or she was above 70 to receive the $5,000 Social Security benefit that you should be getting. That's a free amount of stimulus. And recipients who retired at age 67 will get a maximum of $3,300, but anyone who retired at age 62 will get up to $2,300. The payment schedule for Wednesday will be for recipients who were born between the 21st and 31st of the month. Recipients of SI will also receive the monthly income payment of $914 at the beginning of February, and the money from this payment will either be a lot or a little bit. It will allow people to afford basic necessities and food items and get shelter and food and things like that. Because according to the Fed, the payments are intended to help elderly, blind, disabled people who have low to no income of their own. Eligible SI couples are essential, and people who are living on a fixed income cannot get that stimulus cash. Payment recipients are not receiving any payment for January